You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program I like to call around these parts the option block. A little bit of wit, a little bit of wisdom, sprinkle in some unusual activity, throw on some education, some breaking news and analysis from the world of options. Of course, a healthy dose of your questions and comments, and then appear into the future of the realm of options, mix it all together, and you have the dangerous concoction that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-interesting Options Insider Radio Network. If you're new to us, first off, welcome. Secondly, you got a lot to catch up on. The easiest place to do all that, of course, the mothership, the flagship, theoptionsinsider.com. When you go there, you'll find over... Oh. We got people in the studio playing around with various items online and stuff. That's the danger of live in-studio guest listeners. As we move on. Completely derailed me. Let's start again. Of course, we have, 500 plus archive episodes of this fine program, the Option Block, as well as the other 14 programs on the network. Easiest place to find it, of course, the mothership, theoptionsinsider.com. While you're there, there's a call out on the right-hand side of the homepage. There is the Insider Radio Network tab, top left corner of the homepage. And indeed, that player, if you kind of want to just spin the dial and see what you get, big money, no whammies, hit that player on the homepage there. And you can see whatever the latest episode is on our networks. It's our news show, if it's the Option Block, any of our programs, you'll get it right there. Of course, you can always find it iTunes, TuneIn, iHeartRadio. We're adding outlets all the time. So if there's an outlet out there that you like and we're not on it, let us know. We'll make sure it's up there. Your favorite Ukrainian podcast host will get up there. And, of course, also grab our app available for iOS, Android, and the beloved Fire OS. And if he's done interrupting our program now with his various web surfing, I will now welcome on our in-studio guest for today, Mr. Todd Rich, the president over there at Options Monster Media. Todd, welcome back to the program. What were you surfing? Anything good?
Well, I wasn't looking at anything bad. It was entirely work appropriate.
Yes, all safe for work. I can vouch for that.
Actually,
listeners.
I was, that's something I got to fix. I was just signing on to our new Option Monster website, and I forgot there's a sound effect when you first log in.
There you go.
And this is your computer. It should have been on mute.
Not suitable for broadcast purposes. Yeah, you did mention it. We'll get to that in a little bit. But you guys do have a nice new coat of paint over there on the old Option Monster website. If you want to check it out for yourself, Option Monster, no S, not options with an S. I always make the mistake as well. Option singular optionmonster.com. Nice new coat of paint. I have to say, Todd, I like the new green hue over there. The startup noise, maybe not a big fan of that, but the new hue, I like that.
I'll have that noise fixed by tomorrow.
Broadcast purposes, always important for us here on the network. Check out the new coat of paint, listeners. Let us know if you'll let Todd know, actually, if you like it. And then if you don't like the noise, let him know. He'll tweak it for you.
And if you don't like the coat of paint, don't tell me either.
Yes, if you don't like it, he can't really do much about it now. So if you don't like it, just sit on your hands. All right, we're also joined. Let's go out in order of distance this time, all the way out to the very far edge of this here United States, where we are joined by someone who's almost, you can argue, is in a breakaway republic up there in the hinterlands of Maine. Mr. Rock Lobster, what flag do you fly over there, Mr. Andrew Giovinazzi? What flag flies outside your house? Is it the Duchy of Maine flag?
It actually is a U.S. flag.
Oh, you have those up there? Okay. I thought in the breakaway Republic of Maine you had something else.
But how many stars are on it?
Yeah, only about
just
13.
One, Maine.
13. I think Maine broke away from Massachusetts. There's actually a bar in Freeport that's still standing where they signed the schism papers way back in 1801 or something like that. So it is a bit of a duchy, but all I can say is those darn sponsors, they get away with anything on the radio.
Yeah, playing inappropriate audio, all sorts of fun stuff here on the program. If you guys did that, you'd be out. You'd be out back to the hinterlands.
We'd be out on our ear.
Speaking of someone who's close to being out, but we'll have to stay on for a little bit longer, Uncle Mike Tusaw from RCM Wealth Advisors. He's not in a breakaway republic. No, he's just in paradise on earth, known as St. Charles, Illinois, and quite sad because he had to put away the old boat this week.
It's a sad day indeed, but I do take umbrage for almost being out. But it's only minor umbrage. There's plenty of time left for more major umbrage.
Yeah, the show's been far too polite so far, and someone's got to take umbrage. I took umbrage at Todd's sound. You take umbrage at me threatening you get off the show. So everyone's happy now. We got a good dose of umbrage.
I feel like we're ready to begin.
I think we are ready to start. So without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we tell you what's catching our eye, what was going on in the day that was. From a markets and an options perspective, we are recording this and indeed streaming this live. I always forget at the top of the show to mention, by the way, you can join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixler. MIXLR. If you're saying, what's that? Well, that's an audio streaming service. You can get fine programs like this delivered live to your ear holes whenever we go live. Indeed, just grab that link. We always tweet out there before every show or put out by email or put out via all the other social media outlets or via the website. And just bookmark it because the link never changes. And then whenever we go live, you'll know. Also, you can grab us and follow us on your device of choice via the Mixler app. And as soon as we go live, it'll let you know right on the device, hey, they're going live, so you can tune in and enjoy all the fun nuggets and pearls of wisdom that we can dispense on a daily basis. All right, today, of course, is Monday, October 24th. Hard to believe we're clawing our way through October already, but that said, the election is coming up. And so far, at least this week, market smiling apparently on those prospects, unless you're talking from a volatility perspective. We'll get to that in a little bit. But of course, most of the major indices up on the day. S&P and the Dow up about half a percentage point or so. The tech-heavy NASDAQ rally-ho today up over a percentage point by 1.2% actually on the day. And all this green on the screen and perhaps the dimming prospects for some candidates in the election. Given VIX cash an old exhale today, off about a third of a point, vacillating right around that 13 handle out there. We'll see if we can dip much lower this week, or if indeed we will hold these levels. In fact, we did ask you guys a question of the week. We'll get to that in a little bit. If you want to vote in, you want to weigh in now, we just posted it before the show. If you want to weigh in on what you think VIX will do going into the election, and indeed on election day, go over to @options on Twitter. And you too can cast your vote. That said, Mr. Rock Lobster, it's been an interesting week, so we'll start with you. Interesting day already, but interesting end of last week as well, and interesting weekend, a lot of news going on. But what caught your eye in today's market activity, sir?
Didn't a little birdie over the last, 8 months this year say, the Qs? I think they reached another all-time high today.
I believe it was someone who worked at NASDAQ, yes.
Somebody. And again, I don't think the juggernaut is over for the Qs. I think I almost single-handedly, they're probably driving the vol down because of the bouncy and fluffy nature of the stock prices on some of these things. So as far as VIX goes, I thought that the no future would never really go below 16. I didn't bet hard against it. I didn't think it could really drop down, so it wasn't really. I would say I was not had any aggressive shortfall trades, but lo and behold, it has traded 15. VIX traded 12, fully grabbing November election vol, and at least for today, I mean, I think we probably have a little bounce in vol this week, but I mean, on a Monday, they just marked the crap out of everything. Just done, smackola. Future prices are still, trading, I would say, at healthy premium levels as we start to, wind in. But VIX expiration is November 16th. And right now, barring something goofy happening in China or Brexit 2 or some other thing, I think we're going to have a low print for VIX after this election coming into Thanksgiving. If everything goes to whatever the grand plan is, I think we'll see the 11 handle before the election. After the election.
Look at you coloring our question of the week, sir. Skewing the results already, poisoning the waters for all VIX buyers out there. But that said,
just wish them luck. I mean, it could happen, but you're paying 15 vol for futures in November, and I guess it could happen. We had some strategy letter ideas. We got to sell some of our short vol a little bit, or get rid of some of the short vol puts, but I think there are trades in there. I think volatility in VIX is way too cheap considering even how low it can still go and the potential for it to rip. So it is almost like the beginning of the year never existed. August through February, all of that volatility, that was all mirage, everybody. It just forget about it.
Did something happen in like the February timeframe that I should be aware of? I'm not really sure what you're referring to. Were there multiple tumultuous system shocks to the market and multiple 1% plus moves a day? I don't know what you're referring to.
August, October, November, December, January, February.
I don't know what you're referring to.
It didn't happen though. Did not happen.
Yes, market, particularly volatility traders, we've often joked about this, but they are some of the schizophrenic or bipolar, call them what you will. They got to have it. They can't touch it. And that's kind of just the way that product trades. And sometimes a short-term memory maybe is part of the job description when you're out there slinging a lot of vol. Let's take on the memories. Todd, it's been an interesting day so far in the market, interesting week indeed. What's been catching your eye so far in today's activity?
One, I'm going to reiterate that sentiment that you're seeing volatility getting squished. Everything, the election isn't for 2 or 3 more weeks, but the market seems pretty complacent that nothing big or surprising is going to impact the markets one way or the other. So I get the impression that no one's expecting any surprises. I do find that kind of interesting, because you never know what's going to happen. And that real calm happened before the Brexit vote, although I think people had anticipated that being a little closer than it. And obviously it went, the way that people didn't think it was going to go. When it comes to what's going on now for the next few weeks, and I think people are more concerned, and I would say, is seeing some type of disparity between which of the political parties gets into the White House and which one holds power over Congress, because the markets seem to like it when they're different. It means they're going to have to reach some type of compromise. And I would tend to agree with that because, compromise and living in the middle is where most of us are. But if one party tends to take over both the White House, the executive branch, and the legislative branch, strange things can happen and always create some uncertainty for the market because no one likes extremes. So it looks like they're not expecting any extremes to happen. The other thing that I thought was interesting is we noticed there was some call buying in Visa today going into the earnings, and the stock was running up. And I believe they've announced their earnings, but I can't dig up a quote after hours to see what the stock is doing. But it looks like their earnings came out okay, but I don't know where, what the rest of it was.
Stock's off about 84 cents right now in the after hours trading, 82.33 right now.
All right, so they gave the stock ran up during the day and they gave it right back after the earnings. So this is interesting because generally speaking, going into an earnings, you don't see people really taking a big direction one way or the other, but there were some call buyers going on this afternoon.
Was that courtesy of the newly revamped Option Monster website? All the green showing you all things Visa today?
Yeah, indeed, it did show up as some call buying.
It is appropriate.
Right.
The color scheme for Visa. I like it. But yeah, that is interesting stuff. I think we'll get into. It's not really, today's one of the few days, and it's a good earnings week. Today, one of the few light to earnings days today. I think Visa is kind of really the only big name on the board here after hours, and he said kind of we'll keep an eye on it, but kind of a bit of a resounding meh, as they say, going into the earnings so far. A lot of things hit on there as well. Before we do that, Uncle Mike, what is catching your eye, or what was catching your eye, I should say, today in your activity for today?
Well, a couple of things, not just today, but also last week with the Friday's cyber attack. There are a couple of things that I found interesting. The cyber attack is old news by now, but as we remember from Friday, the fact that a lot of the websites, a lot of pretty big name websites, you were not able to get access to. So Friday morning, markets came down. We gapped down, but buyers came in, which is a good thing, meaning that it's not something that seemed to freak us out too badly. Also, over the weekend, like you're right, Mark, there was some news over the weekend. There's that baseball team in Chicago that actually went to the World Series, which is kind of shocking to me, but hey, I'm very happy for it. Go Cubs. We have that going on. Also, today we had a gap up, but here's the interesting thing about the gap up today. We actually closed lower than what we gapped up. So in doing that, whenever we have something like that happening, whenever the buyers don't continue throughout the day, that's always a point of concern for me. And so I'm going to be very cautious going into tomorrow just for that reason alone, because of the fact that the buyers were all overnight and we didn't get any buyers coming in today. So that's a concerning thing. The other thing to mention, bonds are also still, they had a down day, nothing huge, and gold is also kind of a meh day on today. It's down, GLD is down 27 pennies. The other thing to mention that's kind of hitting somewhat close to home, not too huge actually, is there's two mergers today. The first one we'll save for a moment, but the one that really kind of hits more home to me is TD Ameritrade buying Scottrade. Now, with that, at RCM, that's kind of one with which we'll look at. And so I'm also kind of curious to hear the point of view of another broker on the show on that in terms of how that's affecting the brokerage space in general, and that we got two of the big names that are coming together, and how that can affect things going forward, and then how that can also play a role in the options space with E-Trade buying the broker on the show. So with that, I think that's a huge thing, and also with the Time Warner being bought by AT&T, whether that's going to get approved or not. $85 billion is a lot of money. So, yeah, you're right, Mark. We have a lot going on today. That's for sure.
Well, Todd, since he brought it up, we might as well get to it. It is indeed kind of the big news in the options market today. We all woke up to the news. It's been kind of bandied about for a while that Scottrade was in play. I ran into some of those guys a week or so ago out in San Diego, and they were kind of saying, "Oh goodness, I hope something happens soon." The uncertainty of it was a little bit unsettling to them. Now we know exactly what it is. TD Ameritrade acquiring Scottrade, as Uncle Mike alluded to. You've been around the space for a while. You've been through a few broker acquisitions yourself. What are your thoughts, maybe 10,000 foot on the deal and its impact on the markets as a whole, and then maybe down the rabbit hole a little bit more if you think it has any impact, any material impact on the options market? What is that?
All right, so first I got to put out the disclaimer to be very clear. I am part of Option Monster. Option Monster being a research, analytics, market commentary, community organization. We are related to Options House, the broker-dealer, through a shared parent company, Aperture Group. So I am distinctly not part of the broker-dealer. And, of course, Aperture Group was recently purchased by E-Trade. And we're in the process of going through that acquisition. Just another one of the mergers going on in the retail discount brokerage space. Don't really have any inside information, or I don't even have any real color commentary. Everyone knew Scottrade was out there. We all know why they were shopping the order. And, I mean, from what I read, it looks like they're not going to close the deal. I mean, it's going to go through bits and bobs, but they're looking at September of 2017 is what I saw, which is an awfully long time. And then 2 years after that to even try to get through any type of integration. So, I mean, there's a tough road ahead for those folks. And I'm sure the Justice Department will give it its due look in terms of making sure that they're not harming competition in the discount retail brokerage space. You definitely need some competition. $4 billion is certainly interesting, but that Time Warner, AT&T at $85 billion, I mean, that's just a number. And that one to me is going to be more entertaining to see how that one plays out because they touch, everything. I mean, it's a full-blown, media conglomerate that they're going to try to muddle their way through that one. So that should be a fun one to watch as well.
Yeah, I love seeing people paying $80 billion for content. That's always brings a smile to my face, being in the content business itself. But you're right, the latter one, the Scottrade TD Ameritrade deal, at least for our specific neck of the woods, the options side of the space, not probably going to have a huge impact. Everybody who at Scottrade knows they weren't a huge player in options. For a while there, they actually did license the options house. They white labeled it. That was kind of their options platform. I think they use IB these days. But either way, Scottrade never really been a big participant in the option space. Maybe this will be interesting now to see. Maybe TD obviously does play in the option space. Maybe this will be an interesting thing to see if they can bring some of those Scottrade primarily equity customers over to the dark side of options. If that's the case, that's actually maybe the end of the day a good thing for everybody in the space because more people playing in options. That's a good thing. And then who knows? They can all be poached and go elsewhere. But for our particular area of concern, options, I don't think it's the biggest deal, but it will be interesting to see. I know for a lot of those guys over there, some certainty as to what the heck they're actually doing, I think will be a very welcome development for them. Speaking of developments, we got to keep on rolling, see what's developing on the dark side of the space, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the program where we break down what was catching our eye on the darker, weirder, crazier side of the options market today. This is the course where you guys at home can also play along, donning your fedora and your trench coats, and follow us into the parts of the market where angels fear to tread. We're going to kick things off in a name. I don't think we talk automobiles here that often, the automotive side of the space, so a nice little departure for us. This is Fiat Chrysler Auto Group, ticker symbol FCAU, closing today of $6.51, so 6.5 pretty much on the dot, right about there. This is the name that does about 4,300 contracts a day, and today doing about 24, nearly 25,000 today. The lion's share of that volume, pretty much 20,000 of it, coming in one sizable call vertical. That's why we got about 28.2 to 1 calls over puts out here in good old FCAU. If you're looking for what the paper was, you got to scroll out a little bit because it was a wee bit into the future. In particular, it was the March-June 7 call spread going up 10,000 times and a little bit of change, but mostly 10,000. Looks like paper buy in June, sell in March, doing that net for 32 cents, so paying up a little bit for the June. Open interest on the June is non-existent, so that's clearly opening, and 34,000 contracts open on the March. So looks like our friend perhaps deciding discretion already is the better part of valor out there in March and saying, you know what, I'm going to roll this bad boy and I'm going to do it now. Doing it in 4 blocks. Over on the ARCA, I didn't see any stock or anything else going along with it. Looks like the way they did it, it's net a wee bit long delta. This is the name that has been kind of floating around some of these levels for the better part of the last year. It was trading higher towards the end of last year, right around 14.5 or so. Then right towards the middle of December, it got its legs shut up from under it, dropped down to the 8 or so handle, and kind of really hasn't looked back since then. It's kind of been vacillating from about the 8 down to these levels here, the 6.5 range, where it's kind of been flirting around for the better part of the past few months. Mr. Rock Lobster, what do you think of our friend here deciding as of October 24th? You know what? That March, I got to roll it now. Why wait until March when why get done in March when you can do in October, huh?
That to me is a bit of a head scratcher.
Didn't you always roll your positions 5 to 6 months ahead of time? That was standard practice for me. I never traded front month. I couldn't do it. I had to close 5 months ahead of time.
Exactly. I don't know what. Maybe somebody just had to hurry up and get it done. They had too much concentration in March. Again, that's why we call it the odd block. So people can why do institutions make those rolls? Trying to save taxes, because it doesn't matter. It's the wrong part of the year. It made absolutely no sense to me. Of course, that's why I had to profile it. I don't think Fiat has been the same since they spun off Ferrari, which was kind of their marquee. Let's just call it their jazzy growth name, I guess, if you could. But, I mean, car companies don't go anywhere. My gosh. I mean, the stock just kind of lumbers around. They have huge revenue. They sell lots of cars, but nobody wants to buy the stock. So all I say, you want to buy calls or roll them in Fiat, it's more power to you. Knock yourself out. But I don't see the point.
I'm sorry, I wasn't paying attention. I was too busy rolling my July puts from next year out to Dees. I figured it was getting a little too close to comfort for me. So I had
those
2018s. Yes, I had to move those. 2018, a little too close on the horizon. If I'm not at least a year and a half out, I'm not comfortable out there in good old Fiat. Yeah, that certainly qualifies for the odd block consideration today as we keep on rolling into our next day. I'm kind of mixing it up a little bit today. This next one, surprise that this one would be. I'm not sure how you ever stumbled across this name today, Mr. Rock Lobster, of all names, because it really is not appropriate for our odd block because nothing's going on out here. This is, of course, a Time Warner Inc. ticker symbol, TWX, closing off on the day, off about 3%, off about nearly $3, $2.74 to be precise, closing $86.74 is the name that does about 9,200 contracts a day, doing a whopping 175,000 today, Todd. So pretty active day out there in Time Warner. I guess a little something going on out there. I don't know. Maybe they cut a dividend or something. I don't know. Something happening out there in Time Warner land today. No, of course, this is what Todd was alluding to earlier with the big deal going up out there today, 80 billion or so with the B, and we saw a lot of activity out there as a result, including what caught our eye out here today, someone deciding to come in and just draw I think you can call it a sizable, some might say massive, some might say interesting line in the sand out here in the NOVE contract. This is good old standard NOVE expiring on the 18th, not playing around, not messing around with any of those weeklies. And it was the NOVE 85 puts going up, looks like paper, just blasting away at these from prices for $1.30 all the way down to 70 cents. So just chasing these the whole way down, doing a total of nearly just a tick under 4,000 on the day, 38.50 to be precise. That's on open interest of just 2,000 contracts. So clearly opening paper out here. Went up in scattered blocks on all floors. You know they want it when they're chasing it all the way down to 75 cents. That's when they really got to get those in. We also did see not just the puts, but we also did see some calls going up out there as well, to the tune of the Nove pars going up about 20,000 times total on there. That's with a dime. Most of that buying could be related, could be someone legging into a risk reversal. Also about 22,000 contracts open on that Nove par strike, so it could be unrelated, someone coming in and just closing out the par strike, thinking, yeah, after this deal, that strike, not exactly good for the dodo. Maybe just taking off a short and just taking it away, taking the risk off the books. As we said, this name has been a big driver of news today, big driver of activity. We see a lot of M&A related paper and these kinds of names. TWX, no exception. Mr. Rock Lobster, what's your thought here on the puts? And then also, you think he's legging into a risk reversal or just closing out some upside here?
I think, though, at least on the call side, it might be just closing up some upside. The puts were, it was one of our guys in our pro chat group, because we were talking about this takeover today. I like his comment. There's probably easier ways to make money than selling puts in Time Warner. And rightly so. You get a Hillary or a Trump, no way we're going to let this merger go through. I think these mergers they've become really politicized. And this would create a giant conglomerate. So I'm trying to think of, if those guys want a merger, because mostly Time Warner now is content, and it's content everywhere. And, I guess they're trying to struggle selling their stuff to the cable bundle, but maybe they're getting around it now by just buying a bunch of the content and pushing it through your phones. At first I thought, and I go, there could be some potential here. Somehow they could make, phones or, I could see how maybe it does something. But as far as AT&T goes, AT&T was trading 39 and now it's trading below 37. So as a stock that pays a pretty good dividend, I had a diagonal on that kind of is getting smoked right now, and I have to keep rolling the short puts. But that's why we have a diagonal, so I didn't have to take the full pipe on the whole thing. But still, if and it's going to take about a year for the deal to go through, so that should lock AT&T up for a while as far as the stock not moving very much. So, maybe I'll sell some more puts in it or something like that this week if it starts to look like AT&T is just not going anywhere. They're going to keep doing their thing, but as far as trying to figure out the future, who knows, as they wait for this deal to go through. As far as Time Warner goes, it's do the deal premium. It's at least a year out. What is it? 107 is the takeover price. It's trading $82. The volatility in November, I think, got down to the teens today. So really interesting as far as that goes on how all that's playing out. Because I think Time Warner really it is more a fact. What's actually happening to the company really doesn't matter. It's more news snippets and how much the underlying can move. We'll put it this way: the Nove, what was it, 88 put today got as low as $1.65, and we were just seeing what the Nove 75 puts trade as high as $1.30. So big changes in vol since the open. And just I think it's not going to be an easy deal to trade by any stretch. It'll be a combination of cash and stock. I hear it could be as high as 50% stock. So, and it will be a battle. I'm thinking though that the better side would be the AT&T side from a risk reward point of view, and now especially now that they've really taken a good chunk out of AT&T, about 8% of the stock price out, at least for the next year. So we'll see. I'm not quite sure yet if I want to wade deeper in, but I might. So,
Todd, and all those advanced new green screens you guys have floating around over there on Option Monster, I'd imagine that TMX and AT&T were big volume and thought leaders over there on the site today. So what was catching your eye out there with all this TMX AT&T action?
I'm actually going to, well, I think you mean TWX.
Sorry, TWX.
And I'm going to agree. I mean, they've taken a lot of gas out of AT&T, thinking they're paying a lot of money. I think there tends to be a little bit of a safer aspect. If if the deal doesn't go through, you'll see AT&T come right back. I'm a little surprised by someone coming in and selling so many of the Time Warner puts. If the deal, the only thing I could think of is all right, there's a floor now in Time Warner. A price has been set, and at least for the short term, out until November, you sell whatever premium you can for some out-of-the-money puts and just collect that, especially if you were long the stock. You got clipped a little bit, so maybe you're just trying to, take some of it back, maybe even do it again, because, they both went down with the announcement. So that's the only thing I could think of is, at least in the short term, is that everyone's going to sit and digest this and don't expect them either to move around very much as everyone waits to hear if it's going to pass muster with the Department of Justice, and it's going to get all of its cleared through all of its regulatory hurdles, and maybe 6 months from now people feel differently. If it's going to happen, you'll see the risk arb between the two line up a little bit better. But at least for right now, if someone was long Time Warner and is a little disappointed at the price they're getting for their stock, this is a way to reap some of that back, at least in the short term.
They're pretty certain when they're blasting those puts all the way down like that. They're just chasing them down. Then that whatever premium they're getting, they want to just squeeze it out as much as they can.
Yeah,
so clearly they're certain, at least in the near term, through Nove, that floor will hold. All right, moving on to our final name. Also in the media, the content side of the fence, this is CBS Corporation, ticker symbol appropriately enough, CBS, closing today $56.35, off a little over 2% on the day. So the name that does about 7,500 contracts a day, doing just a tick under 30,000 today. Pretty evenly split 1-to-1 puts to call. So there wasn't a particular bias anywhere that caught our eye, which also may give you some hint as to perhaps what went up, something maybe involving puts and or calls. In this case, it was out in Nove. The Nove expiring on the 11th, so the weeklies. 57, looks like the straddle. Paper going up, looks like paper selling the 57 calls and the 57 puts, doing it about 5,200 times each, doing it for $1.50 and $1.60, so $3.10 total on that straddle, and no open interest to speak of. Is pretty much all opening on both strikes, going up in 2 chunks over there on the ARCA, and again, these posted pretty aggressively through the bid. So again, this looks pretty heavily like someone is blasting it out. We did dig a little bit to see if there was any stock going up this. Maybe if there was indeed, it could have been some sort of reversal conversion, but it doesn't appear to be that way. Didn't see any stock lining up, and again, both prints aggressively through the bid. Good sign that they blasted away on both of these bad boys. They do have earnings coming out on the 3rd, so this would indeed include earnings here. And looking back over the last year or so out here in CBS, this thing has had a bit of a range, trending down as low as when the market hit its nadir back in February, down in the 41 range, and then of course hitting as high as about 58, so a little north of 58 or so back again recently, and doing it again a few months ago. So perhaps our friends here deciding 57, a nice strike. This thing is not going anywhere through earnings, and they're looking to scoop up their $3.10 to do it. Mr. Rock Lobster, take us home. What do you think on someone blasting away some naked straddles out here in CBS?
This was one of those. I was looking at the paper. It looked like it could be a combo, just like a call put, buy call sell put or something, because it was right around the price of the underlying at the time. I couldn't quite see the reason for the combo, but there wasn't enough stock going up. There should have been 500,000 shares. I counted blocks that were real scattered of less than 200,000. So, and the prices were fairly low. So it looks like somebody's blasting out the CBS. I know that I thought there was potential for CBS to be bought by Viacom at one point. I don't know if like the Time Warner deal does something with that, but I thought this is a pretty aggressive sale of a straddle into earnings. Maybe not expecting a whole lot, but it kind of was a surprising trade, to be honest. There wasn't a whole lot of open interest in it. And it did trade through the bid. I mean, it was normally when you see stuff trade that low, somebody's selling it. So that's, again, it's just an aggressive straddle. What else can you say? Heck, it was aggressive.
It was aggressive and naked. How do you make a straddle even more fun and more attractive? You do it naked, of course. And
as many things are, but
there goes our
I didn't
clean
say that
rating.
on air, did I?
There goes our clean rating on iTunes. Thank you for that, sir.
Exactly. No. It's all disappeared.
Before we go any further into the gutter that is Andrew's mind, we shall keep on rolling. It's Monday. It means it's time for your questions. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. It is indeed Monday, so it's time for you guys to take the reins with your questions, your comments, your insights. Hit us up, no shortage of ways, at Twitter, on Facebook, on the website, questions@theoptionsinsider.com. It's all baked into the app, or, of course, if you're streaming live, you can hit us up there as well. A lot of questions. First off, we asked you guys, right about an hour before showtime, we put up there our question of the week. We wanted to ask you guys, you got all week to vote. But we put it up there. What you guys think is going on? We, of course, are talking on top of the show. Didn't get a chance to get into all of it, but all the major media talking right now about how the Trump premium, the Trump factor is just being priced right out of the market. VIX is squeezing it every way you look. The term structure of the S&P, VIX futures term structure, and the weeklies and the premium, et cetera, et cetera. It's all pretty much discounting a Trump election. So we asked you guys, hey, is Trumpocalypse finished? Is the VIX already pricing in a Hillary Clinton win? So where do you guys think VIX is going to close on Election Day? We gave you guys 4 choices. We said Unchanged, gave you a pretty wide range there between 12 and 14 handle, which is right about where it is right now. Or Elevated, which would be somewhere in the 15 to 18 range. Spike, so that'd be over 18. Or you think it's going to be a sell-off below 12. Again, it's only been up for about an hour or so, but let's see what I won't pull it up yet because I know Todd will be inclined to cheat. So before I pull it up, Todd, what is your vote, and then what do you think our listeners are voting for?
Well, one, I'm surprised that volatility has actually gotten down here this low. There's always some uncertainty, and you just don't know how people are going to react. I'm going to go with what I think is the favorite choice. I'm going to actually go where I think it's going to go. I think Elevated. You know, I don't see it going much lower than this. I mean, there's got to be some uncertainty going into the election, and I think as we get closer to November 8th, right on Election Day, I think you'll see a little bit of a bid up in volatility, just in case. I mean, let's face it. These are not crazy, pricey levels for volatility. In fact, it's actually toward the low end.
And it's not a small event either. It is the leader of the free world, as scary as it may be in this election coming around. And what do you think is our listeners are voting for?
And I think it's going to go both ways. I think they're going to go with Elevated, and I think it's going to be Elevated. I think you'll see it trade above 15.
A double vote for Elevated.
I am. That's I don't think it's going to spike and do something crazy unless the polls show something. And again, I'm going to go back with my concern is that it looks like one political party takes over everything, in which case, it could wreak some havoc on the markets.
The market does like some gridlock, that's for sure.
Sure. It removes some of that uncertainty, and it forces compromise, which tends to be better for everyone.
Uncle Mike, what are you feeling on this one this week? What are you feeling, and what do you think our audience is feeling?
Okay, my feelings are that if we do have, I'm in agreement in that I think that if we do have, if the Democratic Party takes the White House and the Senate and the House, I do see an increase in volatility. I don't see it going over 18 for that reason, but I do see something happening to where something's going to happen and it's going to become a closer election. It looks like Hillary's going to win still, and that's who I think's going to win. Not saying who I'm voting for, but I'm just saying that's what it looks like right now. But I do see something happening to where Trump's going to get some type of momentum, and I could see some type of fear coming in, just along the lines of like the Brexit. No one expected that to happen. And with that, I think we're going to get some type of fear in there, and I could see something happening based on that, combined with the potential of having both houses and the White House and the Democratic Party. I could see all of that uncertainty with which I just mentioned pushing us up pretty significantly. So I'm going to go with my opinion. I think I'm going to go with 18 plus for that reason.
Wow, you're feeling Trumpocalypse.
I am
over
feeling
18.
that.
Wow, interesting.
But with that being said, I think the audience is going to go 15 to 18.
Interesting. And Mr. Rock Lobster, take us home. What are you feeling, and what do you think our audience is feeling?
I'm feeling vol will go a little higher than this, although I've been wrong so far about how far it would drop. I figured we would keep some bid, and in term structure wise, the constellation of volatility, the term structure has been higher.
Yes, Steve graced us with that term last week, and now it's just kind of penetrating everything. We're going to borrow it on a lot of our uses.
The short-term vol is just in the basement. So what I would say is, if vol will continue to do what it is right now, because realize vol is about 8%, VIX will kind of chunk along, and then you'll get that last-minute vol worry. I don't think it goes over 18, though, because it looks like, just because those online betting services are the odds of Hillary winning now are huge. So
yeah, she's like 95% or something like that.
Yeah, so it's hard to go against that, and I think that's why vol is going down in the short term. We'll probably see lower short-term levels, but everybody will get a little nervous right at the last minute, because that's what happens almost every single time. The exception actually being they didn't destroy, but they took volatility down pretty hard from an elevated level prior to the Brexit and the after hours, I remember too. So every once, you're going to get a pretty good sized move probably in the after hours. The day of the election, we'll see. But I see, for me, I don't see it going over 18, but I say elevated, and I think that's what our viewers will say elevated going into the election. Our listeners.
Yeah, I was leaning just because we've seen so much complacency out there in the marketplace. I was leaning the higher end of the unchanged, but I'm kind of feeling somewhere in that kind of 15 or so to 16 range right on the day itself. Some last minute little kerfuffle. So I'm going to go in the elevated as well. I think we got a lot of votes for that, except for Uncle Mike, who's a clear buyer of vol. Our listeners are kind of divided. 32% so far in the first hour or so saying elevated. 27% saying sell-off below 12. So they're fading the whole election thing completely. 23% say in the Uncle Mike camp saying spiking over 18, and 18% coming in unch, so in that 12 to 14 range. Again, we got all week for this poll to go, so I'm sure these results will ebb and flow. But still interesting to see that in the early voting, sell-off right up there with elevated. All right, we got time for a few more here on the mail block. Todd, this is right up your alley. He's asking for an options house guy. You'll have to make do as our token option monster guy today on the show. Mark Brant here wants to know, hey, how do funds get orders routed to floor traders? If options house hosts, please discuss this. Thanks. He's starting to run a fund, I guess called the Big Kahuna, and he wants to favor option house to do it. So a question is kind of, in our wheelhouse, we see this a lot, big trades going up. They get facilitated quite often in the options market, which I believe is what he's referring to. So walk us through that process, if you could, sir, from your various perspectives. You've been at the exchange level, you've been at the BD level, you've been on the media side now. Walk us through this process.
The answer to this question actually could take a while. It's a whole.
You have 3 minutes.
But I'm going to do a lot shorter than 3 minutes. I'm going to do the very abbreviated version. But for equities and for equity options, in fact, very, very little goes to a trading floor anymore. There are what are called wholesalers or order flow aggregators who, particularly in the retail space, they buy order flow. And the brokers collect a little bit of payment for sending their order flows to those brokers and then it's a very, very close monitoring of best execution. Are they customers getting filled at or better than the national best bid or best offer? And in fact, a lot of times in the retail space, someone goes to buy an offer or sell a bid and they get a better price. It's called price improvement. Something that the Boston Options Exchange, now Box Exchange, had invented, but now all of the Options Exchange employ, where order flow gets routed to these aggregators. These aggregators then put up they're called mini auctions, and they'll start on the national best bid or best offer, and then there's a competition amongst people if someone wants to step in front of it to give the customer a better price. So that's really how it works. It's kind of convoluted, but you'll happen to notice that there are times where you get a better price than what you had anticipated. But yeah, very, very little goes to a trading floor any longer. Just about the only things that go to a floor now might be some large dividend trades that used to go to the Philex. I think they stopped doing that now.
I had the NASDAQ guys in here last week for FIA, and they were saying they're kind of they're not out of the div play game, but it's not really the same business it was anymore. Thanks to OCC and a lot of other changes that have gone up over there, that business is no longer the way it was. And you're right; it may shock a lot of people to hear that. They say the orders don't go up on the floor when they do obviously get printed on the floor, but they're pretty much facilitated and wrapped up and all but executed way before they get there these days. And so I think that may strike a lot of people as surprising. I think order just still is the old days. The broker walks into the back of the crowd and shouts, "How are they now?" And it's a little bit different world these days.
Yeah, the amazing thing, and I know that in this they talk a lot about high frequency traders. Those folks, I think high frequency is the wrong term. It's more low latency traders, and those are the folks that are keeping the prices in line across the multitude of options and equity exchanges, so that no matter where what destination your order ultimately makes it to, is that you're going to get the best price. And every exchange is obligated to give best execution. They can't trade through one of the other markets. So market structure right now is pretty convoluted. But if you're a retail person and you're looking to do a trade, and I could tell you, at least on the Options House platform, it's rather remarkable. I can look at what the national best bid and best offer are, and if I want to middle the market with a 10 lot or a 20 lot, you'll watch. You click your button and instantaneously there your order is in a fraction of a second, and you are the bid or you are the offer. And it's being represented out to the entire world because there is one consolidated options feed called the OPRA feed, Option Price Reporting Authority. So when it comes to trading yourself or an active trader, you've got just as much access to information, really, than everyone else does. And that whole concept of trying to make a fraction of a penny, I never am trading a stock or an option for a fraction of a penny. If that's your profit goal, then you should be in a different business.
It's an interesting conversation, though. Maybe it's worth an expose, and not on this episode, obviously, because we're running out of time, but maybe on a future episode, this program or somewhere else on the network, doing something like the life cycle of an order. You can break it down retail, what happens when retail clicks that button, and then your proverbial grandmother with her 10 lot from Iowa, then your big institutional guy doing 10,000, and kind of what happens behind the scenes and the mechanics and machinations that go into the execution of some of these orders. I think it might be kind of eye-opening, I think, for a lot of people out there.
I know that this was a hot topic about a year ago when IEX went out there as an equity exchange, and they were telling people, and there was a book about it, and how retail customers were getting the short end of the stick because these low latency, high frequency guys were, quote, front running, unquote, their order. Front running is something entirely different, and front running is illegal. Front running is getting a customer order, looking at it, trading in front of your customer, and then trading against your customer immediately afterwards, and arbitraging your customer order. That no one's doing that. That is highly illegal, and that is monitored. What was more surprising to me is that there were people at Royal Bank, at RBS, that they were, running their global equities trading, and they didn't know what happened when they pushed the button. They didn't know that if you sent an order to one exchange, that it's public knowledge now. Everyone saw that order, and of course, if you see that order, it's going to impact the prices on all the other exchanges. And to me, it's kind of remarkable that someone could be running a global equities desk and not already know that. So I think it was disingenuous on their part to say, I didn't know what happened. They knew exactly what was happening. They just didn't have the proper technology in place to route your order to multiple destinations, at the same time, or try to protect against information leakage.
Yeah, Flash Boys didn't paint a lot of that crew in the best light. They just woke up one day and realized they were being disadvantaged left, right, and center. And if that's actually how it played out in the marketplace, then they probably should have been looking for new jobs a lot sooner than when what happened in the Flash Boys book. So yeah, interesting stuff. We can probably do a lot of that. We have to keep rolling with the show. Really quickly here, we got Nick Howard, my erstwhile co-host there on This Week in Futures Options, chiming in. He's in the chat right now, voting for Unchaged in the volatility poll. So that means we have one vote for Unchaged, three, I should say, for Elevated, and then one for Crazy Cants, a.k.a. Spike, coming from Uncle Mike. So interesting stuff. You guys have the rest of the week to vote, and we'll discuss the results later this week and early next week. As we keep on rolling to our final segment, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, people, we got some names coming up this week, which is nice to sink our teeth into some actual concrete earnings. Unfortunately, they're not happening on show days. Otherwise, it'd be good. We'll talk about them in the rearview mirror, though. We got the big fruit company coming out tomorrow. We got the land of crazy hyperbole and electric cars, a.k.a. Tesla, coming out on Wednesday. We got the Googs, a.k.a. Alphabet, on Thursday, along with Amazon and the erstwhile Twitter, who can't find a dance partner these days. And then Friday out there, and if that's not your thing, if petroleum's your thing, you got Exxon on Friday. You got a bunch of other names popping off as well. Those are some of the big ones. But Uncle Mike, I got a feeling, even though you're not playing that much in those waters anymore, you're still going to be paying attention to the fruit company tomorrow.
I always do. It's for, at worst, nostalgic purposes. It's a fun thing to watch. Looks like the straddle or the 117 Apple's right now at 117.65. The 117 straddle for this week's trading at roughly a little over 4. So with that, I'm sorry, a little over 6. I guess I read that wrong. So with that, we look to see some movement in Apple, always watching that. Also watching just to see how the movement of the market is, just to make sure they didn't quite, it looks like everything's been digested on the cyber news from this past Friday, but watching to see if there's a second type of attack of some sort. And as always, watching our politicians, as I've said on this show many times, I have faith that they can move markets, but I'm not going to say which side.
There you go. Leave our listeners with a tease. And Mr. Rock Lobster, what are you watching for the rest of this week, sir?
Earnings, the continued steamroller of the Qs, Google all-time highs before earnings. So apparently somebody out there thinks that this whole social media telephone thing is going to grow. So I would not get in the way of that right now. I think, to be honest, we've just, as far as those parts of the market, we are just beginning to see what the things on those little handheld devices are going to do. So that's my bullish bent for that kind of stuff. I haven't seen anything to change that in a while. I guess that'll be the last thing too. If there's a worldwide global meltdown, I guess people still want their phones, but maybe the stocks will be cheaper to buy.
The phone won't work, but you want your phone, right? You can throw it at people in the zombie apocalypse.
Exactly. So, again, 12 handle at the end of the week for VIX wouldn't surprise me, but I think the earnings have been okay. Financial earnings have been okay. Microsoft, I don't know why they keep loving it, but they love it. It's, I don't think it's seen this level since 1999, although the multiple is vastly different than it was back then. But they're buying it. So I just kind of expect more of the same. maybe the broader market gets a little breather because we have financials are all starting to post close to year highs. So we'll see if there's enough to push them over the edge, as it were.
And Mr. Todd, take us home. What are you watching for the rest of this week, sir?
All right, so I just brought up, I got to put a little plug in, and it's easier for me to just read it off the website. I jumped on the optionmonster.com website, jumped into Research Lab and looked at the calendar, and there are, there's a lot, particularly in the pharmaceutical sector. It looks like tomorrow we've got, tomorrow's Tuesday, isn't it? There we go. We got Merck. We got Baxter. We've got Eli Lilly. Later in the week, we have Bristol Myers. So, I mean, there's just earnings every single day. Coca-Cola, Southwest Airlines. So it's going to be names all week with earnings. Amazon, the same day that Google goes. So beyond some of that stuff, I also taken a look at who's going to be speaking. We had some Fed speakers today. Tomorrow, Mr. Draghi will be speaking. You never know what's going to come out of Europe. So, sometimes that has a potential to move the markets. So it's always kind of good to know what's going on there. Later in the week, durable goods, initial jobless claims again on Thursday. So there's plenty of earnings and economic numbers coming out this week to keep your eyes on.
All right. That music means we've come to the end of another epic journey through the world of options, talking elections, talking acquisitions, talking unusual activity and CBS and Time Warner, all kinds of other fun stuff, talking the life cycle of an order, as well as your thoughts on all things VIX, and now we bring it home together. But one last time before we go, we check back in with my cohorts, my partners in crime. Let's start off in the hinterlands, the Duchy, the Republic of Maine. Mr. Rock Lobster, what's cooking in the land of the pit, sir?
We're going to have a VIX seminar soon. I believe, Mark, look for it. Mark had to push the time or change the time on Wednesday because there's some baseball game going on, I think. There's a baseball game going on Wednesday that I don't think heck or high water will allow him to miss. And then we'll have the full VIX webinar at the end of the month on the 5th, I believe, or beginning of the month.
Probably a good call. Probably some overlap between Cubs fans and your audience, I would think.
Something like that.
Just a few. Not all Mainers in your audience. All right, check it out, optionpit.com to learn more. And Uncle Mike, what's cooking in the land of all things RCM, alts, and going long?
Well, if you are interested in working with a financial advisor who does not think that options are a dirty word, feel free to contact me at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
There you go, everybody. And take us home. Todd, you were just telling us about your newly revamped, newly user-friendly, and very green Option Monster website. So listeners should check out the new revamp. What can they, you just mentioned the research tab. What else can they find over there?
You know what? There's a lot there. Optionmonster.com, your home for research, analytics, community, market commentary, all in one place. Make it easy for you.
Gotta get some of those monster folks here in the chat room while we're doing the show so they can give you a hard time during the show. So I don't have to make my job a lot easier. All right. Check it out, optionmonster.com to learn more. And on behalf of Todd and Andrew and Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. Keep them coming. Don't forget to vote in that question of the week. And we'll see you next time for more of The Option.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.